Welcome back to Gerodynamics. Okay, so I've been seeing some things making the rounds on social media, and as far as my responses, as far as being political and things like that, I try to keep that off of Facebook. I used to do that a lot on Facebook, kind of rubbed friends and family the wrong way, and I didn't really there was really no purpose to it, right? So I pretty much stopped doing that on Facebook. Very, very little in the way of sharing things or commenting, that sort of thing. I don't want to get in a political argument with friends and family, so I usually avoid doing that. But I've been seeing these things on Twitter. That's a whole different story. I'll comment on anything. I will share anything. I don't do a lot of sharing because I don't have a lot of people like following me or anything on Twitter. If that ever changed, obviously I would do it more. And so, but for Facebook, I just try to avoid it. But even like my mom shared something on Facebook, and I wanted to comment on it, but I'm like, you know what? It's my mom. Just leave her alone. And then some new friends, and I don't want to cause problems, right? But these are things that I see people talking. People post about taxes, and they really don't know what they're talking about. They don't have the knowledge to be able to understand exactly what they're saying, and so other people share it when they talk about it, and that's how these things start making their rounds on Facebook. And so I just kind of want to address some of these things, especially with taxes. Again, I'm not going to say where I work, but I have a long history of working with taxes, doing things that involve having a deep understanding of taxes. And so this is kind of something that I'm very familiar with, have a lot of knowledge about. And, if you have a disagreement with me about it, let's talk about it. But there is a good possibility that it's not going to go well for you. So let's just talk about it. Um, One of them has been, because this has been the big push lately, right? Is for the wealth tax, and so let's talk about the wealth tax a little bit here. Um, they don't ever get into a lot of details about the wealth tax, but one of the things that they often do is a false equivalency between the wealth tax and income tax, right? So they're trying to say, oh, well, your average person pays 25 to 50% in taxes. Really it's probably more like 10 to 50%, 10, more of the 40 range, right? 10 to 40%. A lot of people don't pay any taxes, but that's a whole different conversation altogether. But they try to say that the wealthy pay less in taxes than your average American middle class type person, right? Which is not true, not in like a factual sense, and not in like actually, looking at the real solid numbers of it. But they try to compare percentages. It gets even worse when they try to shift that over to this wealth tax concept, right? And so you see, um, you know, them talking about doing a wealth tax here in this one post that I'm looking at, where it's saying Elon Musk would pay 6.6 billion to the wealth tax. Jeff Bezos would pay 4.1 billion to the wealth tax. Bill Gates would pay 372.3 million to the wealth tax. And then that would leave Elon Musk with 214.8 billion, Jeff Bezos with 135.3 billion, Bill Gates with 120.4 billion, right? Basically saying that that's a really weird. We'll get into that a little bit here too. Those numbers probably are just outright wrong, but even if they were right, let's just assume that they're right. But that I'll point to that why that's probably wrong. Anyways, even if they were right. Okay, so what are we talking about when we talk about wealth? Wealth is your total. Here, let me see if I can fix this. That looks a little bit off. There we go. Wealth is your total wealth, net wealth. So it's not how much money you have in the bank. It's not how much money you made during that year. It is how much do you have in your total assets. I'm sitting in my house right now, right? Part of my wealth is the value of this home, right? Minus what I owe on it, So, really, my wealth is the equity that I have in this home, plus the money I have in the bank, any stocks and bonds I have, my retirement accounts, all of these things, the cars that I own. These are all things that would be considered the cards in the background there. That's part of my wealth. So, if I had to pay the wealth tax, I'd have to calculate how much this stuff is all worth, right? Anyways, that's the general idea. Wealth tax is based on what you own and the value of your. Really, it's more like your assets. So not so much your like toys and but like if I'm saving these as an asset, which I kind of am, that's kind of an iffy gray area. But more if if you're holding something as a way to build wealth, then it would be considered part of your net wealth, right? Okay, so what they're talking about is everything these people own. So like with Elon Musk, which he's obviously the focus, not so much because he's wealthy, because they didn't do a whole lot of targeting of him when he owned just like Tesla, and they were excited about an electric car that he was putting out. They target him because he owns Twitter, right? And he wants to make freedom of speech more a part of the platform. It's not 100% freedom of speech platform, but it's definitely better than a lot of the other ones out there, right? Um, so they want to target him because of that, because he pushes these things, right? He pushes freedom of speech. Um, and so they focus on him a lot of the times because he is a very wealthy man, but part of his wealth is tied up in Tesla. Part of his wealth is tied up in Twitter. Part of his wealth is tied up in homes. Part of his actually I don't think it is. I think he said something about being homeless one time where he didn't own any homes. He would stay with friends, or he probably rents hotels and stuff when he's traveling, that sort of thing, or he stays, like he says, with friends. I think maybe he isn't really big on real estate. Anyways, that's neither here nor there. So it's all the stuff that he owns, right? And of course, he does have some liquid assets. So when it's cash, when it's something you have in the bank that you have access to, that you could pull out and do something with without any too many concerns, right? That's called a liquid asset. So like for someone like me who's paying off debt and is has a house and a mortgage and bills and a budget that I actually have to live by. A budget. Imagine that. Government's not really familiar with that, but I am. So anyway, so I have a budget that I live by, right? So I put aside money in different places. So if I have what's called an emergency fund. An emergency fund is used to pay off things that you didn't expect to happen. You know, Going down a different tangent here, a very Dave Ramsey tangent, by the way. I do enjoy Dave Ramsey. He's cool. Uh, you don't have an emergency fund to pay for your Christmas presents, right? Because every year you're going to have to buy Christmas presents for your friends and your family, or or if you can, you do. Um, so it's not an emergency. You don't pull from your emergency fund for that. You don't pull from your emergency fund. Sorry, bit the inside of my cheek. You don't pull from your emergency fund to pay for your oil changes. Every 3 months, 6 months, however your car's functions, you do an oil change, right? So you should be budgeting for that. But if, say, you're driving down the road and your tire blows out because you ran over a nail, right? That's an emergency fund. You know that these things are going to happen. You know that something like that is going to happen, but you can't budget for it per se, right? So you have this emergency fund. An emergency fund should be a liquid fund. So you don't have it in a savings where you're investing it. It's not an investment. It's a insurance almost, right? Like you have it so that you can cover any sort of emergencies and you don't have to take out more debt to buy a tire, right? So you have this money, you pull it out, you buy the tire. As soon as you can afford to, as part of your budget, you put it back in the emergency fund and it just sits there. It's like a savings account. You can do it in a savings account where, sure, you'll have like, a small, tiny, tiny percentage of interest built on it. But you don't put it in like mutual funds. You don't put it in property. You don't put it in those. So it's a liquid asset, right? So liquid assets are there for you to go to the grocery store, to go to the restaurant, to watch a movie, those sorts of things. But when you're talking about wealth, it's not just liquid assets. It's everything that is an investment. Is what you own. It's your wealth, right? So when they say a wealth tax, you're paying a percentage on all of it. So there's a couple of things about that. Well, one, it's worth that much right now, right? So say I have a house. I do have a house, and it's worth a good bit right now. Well, more than I paid for it, and more than I owe. But say the housing market collapses, right? So this year I would have had to. I mean, I'm not wealthy, so when they say wealth tax, they're probably talking over a certain like wealth level. They don't usually get into specifics on that. Um, um, Biden is usually talking about income tax when he's making the reference to $400,000, which is hilarious because that's how much he makes. So he's saying anybody who makes 400,000 or less won't pay more in taxes, meaning I won't pay more taxes because I make $400,000 or less. But people who make over 400,000, but he's talking about income tax. With the wealth tax, it's probably in the millions, but don't quote me on that because you never know with these people. They sure do love taxes. They could put wealth taxes on everybody if they wanted to, and that's what you got to watch out for. But anyways, so they say that a certain percentage of your wealth you have to pay, right? They also don't specify if this is a one-time thing or a yearly thing. And so let's assume that it's a yearly thing because I don't see them doing a one-time wealth tax, right? That's not how their minds work. If they're getting money out of you, they want to get it every year. So let's take a look at the first number, right? So that first number is Elon Musk. He has $214.8 billion is his, let's see if I can make this calculator smaller. Yes, smaller. Okay, so 214.8 billion. So let's add it back in because it said after that would leave them. So add it back in, 6.6. So you have $221.4 billion dollars, right? And then let's see. I always get this mixed up. Do I divide it by? Yes, I think that was right. But let me check it the other way too. 6.6 divided by. Whoop. Sorry about that. 214.8 plus 6.6, 221.4. All right. So 3% is what they're saying. About 3%. I've heard 4%. So let's do Jeff Bezos. Let's see if they're using the same numbers here. All right. So for Jeff Bezos, he had 135.3 plus the 4.1 is 139.4. So 4.1 divided by 139.4 is, that didn't work. 4.1 divided by 139.4 is also, yeah, so 0.029, so about 3%. Let's check Bill Gates again. Let's make sure, because I didn't know for sure if this number would be right. So let's check this. 120.4 billion plus 0.37. So we'll just do 0.4, right? So 120.8. So 0.4 divided by 120.8 is, yeah, see, it's a lot less. I don't know where their mistake is here, um, because for Bill Gates, it's like instead of 3%, it's 0.3%. So they messed up somewhere. I'm assuming it's supposed to be 3.7 billion is probably what they were going for. So let's try that. 120.4 billion plus 3.7, 124.1. So 3.7 divided by 124.1. Yeah, yeah, that's pretty close. There we go. So 0.029. So we're looking at, so first off, keep in mind, right? Just because you see these things out there, I just showed. Well, I mean, I can't show you the image, but you've seen the image before, right? It's going around on Facebook. Just because you see something like that out there, I've shown you that they're factually incorrect, right? Just right off the bat. Not sure how they made that mistake or why it's still out there, but it is. Okay, so for Bill Gates, it would be $3.7 billion is how much he would pay with this almost 3% wealth tax. Which yeah, that seems about right. That seems about more accurate. And so what it's saying is, they have this much wealth, they pay this much in wealth tax, they have this much left over, they're still very wealthy. And so why does it matter if we have a wealth tax? Okay. So a couple of things, right? And it says something tells me they'd be okay. It's time for the ultra rich to pay their fair share, right? Okay. So fair share is a generic term that means nothing. They can never define it because it doesn't have a definition. It's just however they feel at that moment in time, and depends on who they're talking about, because if they're talking about someone they don't like, their fair share is a lot more. But if they're talking about some, as you can see from this, they're fans of Bill Gates, right? And so did they do this on purpose? It's possible. They possibly did this on purpose, right? Because they like Bill Gates, they don't like Elon Musk, so they undershot the amount that Bill Gates would have to pay if in this hypothetical wealth tax, right? So they want to use it to punish them. That's the main thing. It has nothing to do with fair share, because fair share is just a generic term that really doesn't have a defined meaning, right? But let's say fair share was an equal percentage, right? Let's just say that. It's not, because what we're about to talk about. So let's say that we're talking about equal percentages, but we're not even talking about apples and apples. We're talking about apples and oranges here, because Elon Musk is paying a wealth tax. So his taxes on everything he owns. Most people, me included, pay money on what we earn in a year, right? Not on our wealth. So I pay a percentage of my income, I pay a percentage of capital gains, that sort of thing. So wealth tax doesn't take that into consideration. So down the line, say, and I think I started this conversation a little bit earlier in the video, but I'm going to come back to it now. So my house is worth however much it's worth. So I would pay for 3% on what my house is worth today, right? But there's a housing crash, right? So next year it's worth way less, right? In fact, it's not worth anything. I owe more than it's worth, right? So do I get money back? Sure doesn't seem like it. That doesn't seem like something that they're going to build into this wealth tax. So basically, you pay tax on wealth that you don't actually have, because the house is no longer worth as much as it was. Same thing can go for stocks, for investments, for mutual funds, those sorts of things, right? You pay tax on how much it's worth at that very moment, but in the next very moment, it could be worth way less, it could be worth way more, right? So it's not, it, you have to define an exact moment in time, and then there's not an adjustment for that later on. So it's not a fair thing, right? Whereas income, or the amount of tax that most people pay, is a percentage of how much you made for the whole year, right? So your whole year, is what you're paying tax on, which is much less than your actual. So I make we'll throw a number out there. Let's say I make 80,000 a year, right? Um, well, I'll pay a percentage of tax on that 80,000 I made, but the the Jeff Bezos, the Elon Musk's, are going to have to pay this wealth tax every year, right? I only pay, well, there's multiple taxes on your income, but let's just say I only pay income tax in the year that it's made, right? They have to continuously keep paying and keep paying and keep paying and keep paying on this wealth tax. Now, mind you, they should be making money, so or earning money on their wealth. So, do they then next year? Is that only the first year, and then so any new wealth then they have to pay a tax on, or is it every year their total net wealth? They don't explain that, right? So they have to pay tax on the same thing every year over and over and over again. And while they should be gaining wealth because they have all these investments, technically speaking, if they didn't gain anything, right? So say they pulled all their money out, they liquidated all their assets so that they could pay their tax, right? Then they never put it back into anything. Not to mention the vast amount of harm that that would do to other aspects of the economy, right? Let's just say they say, you know what, forget it. I'm pulling everything out. Everything's a liquid. Um, and so I pay my 3%, right? Well, next year, they have 3% less. We're just getting really generic here. They're going to spend money throughout the year, but if they're not making anything, right, they have 3% less. So then they're going to pay 3% on that. And slowly but surely it whittles its way down, right? And that's kind of how the wealth tax works. Whereas income tax, that's not how it works, right? Income tax, I'm going to go in, I'm going to pay tax on this income that I made this year. And then next year, I'm going to pay tax on new income that I made, right? Not the same income because I don't have it anymore because I paid it on my house. So that's kind of how that works. These are not apples and apples; these are apples and oranges. And so then people get super upset because they're like, "Oh, why do they only pay 3%?" Well, because it's not the same thing, right? And then when you try to compare the income tax, right? So they pay less in income tax. No, no, that's not how that works. There are a number of things in play here, but let's kind of take it piece by piece, right? So the a lot of times these wealthy individuals don't don't have an income, right? They only have the wealth, the investments, the capital gains, those sorts of things, right? So they don't pay an income tax on that. They pay, say if they sold anything during the year, then they pay capital gains tax, right? Right now, there's not a wealth tax, but that's what they're trying to do. They're trying to install a wealth tax so that they have to pay every year, regardless if they sell stuff and have any capital gains during the year. So of course they're not going to pay income tax. They don't have income. Then, if they do have income, say that they give themselves an income. So say they own a business, and they say, you know what, I'm going to pay myself $5 million this year out of the business. Then they pay income tax on that $5 million, right? And their rate is the top bracket. But the reason why you often see that their percentages are lower is not because they have an initial rate that is lower. It is because they have what's called deductions, and some people call them loopholes, right? The tax system in this country is so convoluted that there are so many ways that you can limit your tax liability. And so if you have a good accountant or a team of good accountants, as a lot of these wealthy people do, then they can find every legal means to reduce their tax liability. Okay, take for instance, we had Mr. Mark Cuban posting on Twitter the other day about how, oh, you know what, I'm going to pay all of this tax on my income, and heap praise on me because I pay my taxes like a good American, right? And then he comes out the next day. He's like, "Sorry, I got that number wrong. It's a little less. It's less than that. A little less, like millions less, right? Mind you, like not a little less, millions less. Why is it millions less? Because his accountants found more loopholes, deductions, right? When they calculated his taxes using every legal means available to them, they were able to reduce the tax that he owed. So he owed millions less in tax after just bragging about paying all these taxes. Now, mind you, he still paid a lot in taxes. He's a rich man, and he pays a lot in taxes, well more than I will ever pay in my entire life. And I pay a lot in taxes. For me, I pay a lot. For me, what I consider a lot in taxes, right? Tens of thousands in taxes, right? So compared to millions by someone in the those sorts of wealth brackets, right? So keep in mind that that even though he came out and bragged about all these taxes he was paying, he was still making sure, or his accountants were making sure, that he got every legal deduction he could possibly get, reduced it by millions more, and so he paid millions less in taxes after bragging about it. All still completely legal, most likely. Seriously, most likely it is 100% legal, right? And it's all built into the tax law, right? That's how that works. And even with that, the amount of taxes he saved himself, or his accountant saved him, is well more than any of us make during the year, well more than any of us will ever pay in our lifetime in taxes, is the amount he saved. Okay, so that's kind of how that works. Um, if you want to change that, you don't change it by raising the rate of taxes. You change it by simplifying the tax code and getting rid of the deductions and the quote unquote loopholes. But that is not what they want to do, right? Politicians can't campaign on, I'm going to get rid of all your loopholes. So, you, Mr. Over there, claiming the deduction for your mortgage, right? I'm getting rid of that. What's funny is the other topic that we're going to talk about, and this is a long video, so hopefully you guys are interested in this like I'm interested in it. But the funny thing is, the other big part of this video that we're going to talk about is the is the idea. My dog's going to come and say hi. Hi, Bruce. Hi, Bruce. How are you doing? Come make this video a little bit more interesting. The other thing that we're talking about is the Bush and Trump tax cuts, right? That's the other thing going around on the internet, right? A big part of the Trump tax cuts, lowered tax rates, mind you, sure did, for everybody, by the way. Not everybody. There was this small, tiny percentage of people that got caught in the middle of these different tax rates being they limited the number of tax rates, right? So there's less tax rates. Most tax rates came down, but let's say you were at the very top end of one tax rate, you could have been pushed into the next tax rate due to the consolidating. And so there were a few people who had to pay more in taxes. I will 100% admit to that, right? But the vast majority of people, 90 to 100% of people, 90 to 90%, 99%, because I just told you not 100% of people, but 90 to 99% of people paid less taxes, right? But because wealthy people already pay so much in taxes, of course, it seems like they got the majority of the cuts because, when you lower a percentage on a much larger number, it's a much larger number that you get. That's kind of how math works. Okay, so the vast majority of people, though, had an actual tax rate cut and paid less in taxes. Seriously, like over 90% of people paid less in taxes. Um, but the other thing it did was it streamlined things like the Schedule A, right? It streamlined your deductions and your loopholes, right? That's how you cause people to pay more of the same rate. If people have less ways of being able to deduct, then people will pay the rate that they're supposed to pay, and you won't be able to bring yourself out of that tax bracket, right? So he actually made the tax system more fair. Not only did he lower the tax rate, he made the tax law more fair. He could have done a lot more, and hopefully he will if he wins in this year. But we're not going to talk about that too much. Um, but let's say, this is the goal, right? The goal would be for people to pay their quote unquote fair share, and we're going to pretend that fair share means percentage, right, of their income. They're a fair percentage of their income, because we already know they pay way more in dollar amount, right? They pay way more in dollar amount. You can't even, it doesn't even come close. So that's not what they're talking about when they mean fair share. So more than likely they mean percentage. And we can get there by eliminating the loopholes, not by raising the rate. Raising the rate does nothing if you don't do anything about the deductions and the loopholes. Okay, so the other thing that happened when the Trump tax cuts took effect, also the Bush tax cuts, but not as much. There were other issues that went along with the Bush tax cuts, that it was more of an immediate impact on the economy, causing revenues to decrease in, I think it was 2008 to 2010, that range. But after the Trump tax cuts, there were 2 years where tax revenues continued to go up, right? We'll get into why they went down after that. But immediately following the law going into effect, not passing, going into effect, right? Tax revenues continued to rise. But you have this thing going around on the internet that says, your regular reminder that if not for the Trump and Bush tax cuts, federal revenues would keep pace with federal spending indefinitely. Instead, these tax cuts have added $10 trillion to the debt. The so-called party of fiscal responsibility is full of it. All of that is a lie. Every single aspect of that is a lie. And you know who put that out there? You know who shared it? He probably didn't write it. He probably shared it. But either way, that was Mr. Robert Reich. Mr. Robert Reich is an economist. I think he even won like the Nobel Prize in economy, or something like that. He's a moron. Oh my God, how are you so dumb? And you're supposedly an economist, right? That's what he is, right? He's an economist. Here, let's pull him up. Robert Reich. Mr. Robert Reich was the Secretary of Labor under, I think, Clinton. Is that right? Or was it Obama? He worked in the administrations of Presidents Gerald Ford and Jimmy Carter and served as Secretary of Labor in the cabinet of Bill Clinton, right? What is his profession? He is, let's see, I may not be right on this. He is an American professor, author, lawyer, and political commentator. Okay, that makes me feel a little better. He is a professor, but what is he a professor of? Let's see. This guy, okay, maybe not the Nobel Prize too. So I get a lot. I got a lot of things wrong about him. I don't think he's an economist. I don't think he got the Nobel Prize. He got. It looks like it says the VIZE 97 prize. Um, he's worked in government mostly. Tenure as Secretary of Labor. He was. So he's like a he's basically a unelected politician, right? He's a probably has a degree in political. Let's see, Studied philosophy, politics, and economics at Oxford. Okay, so he did study economics. Education, business degree. He went to Dartmouth, Oxford, and Yale. All of these things that this guy man has done, right? And he's a moron. It's really sad when you look at it. Anyways, let's take a look at this. There's no evidence whatsoever that that revenue would have kept up with spending. Um, the revenue has never kept up with spending in modern times, right? So when we look at this, we look at this and we say the amount of debt that we have as a nation is based on our deficits, right? And so our deficits are caused each year by our spending outpacing our revenue. So when you say that spending would have kept up, you mean like it was already behind and okay, but at least it would have we wouldn't have had bigger deficits? Is that what you're trying to say? Like each year we still would have a deficit, but we wouldn't have had bigger deficits because revenues would have kept up with the spending. Is that what you're trying to say? Maybe that's what you're trying to say. I can give you the benefit of the doubt. But here's the problem is revenues increased. So spending increased, revenues increased, but spending was just that much more. Why? Because you control spending. Revenue is a little harder to control, right? And so to try to say that it would have kept pace, well, no, because then they probably would have just spent more. If they thought they could get away with it, if they thought that the debt and the deficits didn't look so bad, they could keep up with it, right? But here's the problem is we have no way to know how much revenue we would have generated without the tax cuts. The tax cuts didn't directly impact revenue. We just know that revenue increased after the tax cuts. And the reason being is because with revenue, that's not really based on rates. Revenue is more based on GDP. So if the tax cuts help to improve and increase our GDP, and then our revenue went up because our GDP went up, then the tax cuts actually increased revenue, right? And that's a possibility. But to say that revenues would have stayed up with, and the exact wording in this, that federal revenues would have kept pace with federal spending indefinitely. It's a lie. It's just a lie. And he knows it's a lie because I know he's a moron, but he's not that big of a moron. He knows he's lying. He's making it up because he is a politician in the sense, a bureaucrat. He's never been elected. So he's a bureaucrat in that he, is only thing he cares about is partisan politics, right? Attack Trump, attack the Trump tax cuts, regardless of the results, right? The results were increased revenue. Then, after 2 years, revenues finally went down because the GDP went down, because the government locked down the economy. That's why revenues finally went down. But for the 2 years prior to the lockdown, revenues were going up, even after the tax cuts. So don't let them lie to you about these things. They don't know what they're talking about. They don't understand taxes. They don't understand the difference between a wealth tax and an income tax. They don't know how a wealth tax will impact the GDP. Will it cause us to have revenue increases or revenue decreases? They have no clue about any of this stuff. And all they care about is partisan politics and attacking people that they feel are not doing what they want them to do with their wealth. So that's why they attack Elon Musk more than they attack Bill Gates, because they like what Bill Gates is doing with his wealth, which is huge government control, trying to take over all aspects of our life, whereas Elon Musk is trying to give us more freedom with our speech, more freedom with our thought, more freedom with our expression, trying to give us cars that are actually like good cars that are electric powered instead of just like, okay, well, at least they're electric powered. He's trying to improve our lives. He's trying to get us off planet, which is a whole different topic altogether. Um, he's trying to do all of these things. That's not what they want him to do. They want more oppression, they want more tyranny, more authoritarianism, and they want to lock down people's individual rights with more government control. And so that's why they like Bill Gates. And so you can see that in the way that they attack them, even though they're both very wealthy individuals. So, what do you think about the wealth tax? Oh, we didn't even get to like the last thing that I want to touch on before I end this video. So, let's go back to that original meme. That's the one of the biggest things that I wanted to touch on with this whole video. So, Elon Musk pays 6.6 billion. Jeff Bezos pays 4.1 billion. Then we'll go with their numbers here. Bill Gates pays 372.3 million. I think it's 3.72 billion. But let's go with the original number. So 6.6 billion, 4.1 billion, 0.37 billion is 11.07, right? So just a little bit over $11 billion based on the wealth tax of these three individuals. Do you see where I'm going with this? We spend more than that. Well, if I'm kind of like just kind of estimating, we probably spend a little bit less than that per day in the federal government. Let's kind of take a look. Let's estimate that we have $4 trillion in spending for the year. $4 trillion. Wait, that's 4 billion? 4 trillion. Divided by 365, $10.9 billion. Yeah. Yes, $10.9 billion a day is how much the government spends, right? 10.9 billion. We just generated tax in the amount of 11.7 billion. So therefore, they paid for a day of government spending. They didn't reduce they reduced the deficit by a little bit, by 11 billion. But they didn't reduce the debt. They just paid for current spending, right? So they reduced the deficit a little bit, didn't go to debt at all. It only just reduced the possibility of, more debt in the future by a little bit, by a day's worth of spending. So what's next, right? Let's say I agree with your 3% wealth tax, regardless of all the consequences that come with that. Let's say we agree to it, right? And let's say that we get a lot more than 11 billion because there's way more than 3 wealthy people in the country. Let's even say that there's a substantial amount generated from the other wealthy people. Let's say 100 billion. It won't be, but let's just say $100 billion, right? We have 4 trillion in spending. We have 100 billion extra in taxes. Our deficit was like a $1.2 trillion, somewhere in that range. Let's look it up. What do we have? Federal deficit. In 2023, it was $1.7 trillion. And if you didn't know, which you do, but just in case, $1 trillion is 1,000 billion. So let's say we were even able, based on this wealth tax, to generate 100 billion. That still leaves a deficit, not even like tackling current debt. It reduces the deficit by 1/10. 1/10, like less than 1/10, because we're at almost 2 trillion at this point. So like 1/20th 1/20th of our federal deficit is resolved with this wealth tax. What do we do then? What's next? Let's say we agree 3% wealth tax. What's next? How do we fix the problem? Because it's not raising taxes. So if we can come to an agreement where you actually cut spending, then maybe we can agree to a wealth tax, right? Because we know what happens if we agree to the wealth tax with hopes that you cut spending. The spending never gets cut, right? But if we go in and we say, yes, if you guys cut spending, then we'll agree to the wealth tax, then maybe we can talk. But you have to cut spending a lot to fix this problem. And so we need to be having these conversations. Don't let these memes and these little games that they play fool you, talking about paying fair share, paying a wealth tax, tax cuts cause this problem. No, spending caused the problem, and we have to cut spending. And unless you can give me a solution that doesn't involve cutting spending, which you can't, raising taxes. Well, okay, you want to raise taxes? Explain it to me. Go ahead. Explain it to me how you're going to raise enough in taxes to cover the spending, plus the spending increases that automatically are going to keep coming. Explain it to me, because you can't. There's no way you can tax our way out of this problem. So when they try to tell you that this wealth tax will fix problems, it won't. And they can't explain how it will. And they'll just talk about fair share and making it an emotional argument that has nothing to do with actually fixing the problem. All right, everybody, tell me what you think. Let's comment. Let's talk about this. Tell me where I'm wrong. Tell me where I lied. All right, everybody, take care. Have a good day.